Banks are about to start toppling again. Bank deposits continue to drop while office owners are more and more getting behind and delinquent in their payments to the banks. Banks are holding trillions of dollars worth of office space loans, and they are starting to see that these payments are getting behind. They cannot offload these office buildings if they have to reclaim them. Banks are in a really tight spot, and they are going to start imploding like we've seen before. We're going to jump into that and a whole bunch more. Let's jump into it, folks. Welcome to the Poplar Report. I'm Steve Poplar. I'm an accountant by trade, and we talk about things on this channel that the mainstream media does not want to talk about, or they just don't have the time to delve into what's actually happening. If you like this content, please give us a thumbs up to make sure that this content gets out to more people. And we do have a website, thepoplarreport.com. I got a whole bunch of news articles that are popping up there all the time. If you want to get real-time news and information that we can't cover everything on this channel, and there is a lot more showing up there and more as the days go forward. Supporting that and using it as one of your news sources is a great way to be a part of what we're doing in this community, and you can comment about those things in the comment section. We want to give our thanks to Genesis Gold Group. They do a fantastic job helping people move their retirement funds out of stocks, bonds, and other risky investments over to gold, silver, and platinum. Jonathan and his team, I've talked to a number of you guys out there, and I've heard a whole bunch more from you folks that they've done a great job answering all your questions, making you feel comfortable, and helping you with the transfer to make it as painless as possible. You can find them down in the description down below. So the work from home phenomenon has gotten worse than it's ever been, except for the pandemic, of course. People have had to come back to work in a lot of places since then, but a lot of offices and a lot of people that have been working from home have just gotten used to doing it that way. And so a lot of companies have allowed a lot of people to stay home from work than what they have. And this has led to a 50% unoccupied space in offices around the country. Occupancy rate is at 50%. That is rough. That means half of all office buildings, half of all office spaces in the United States are vacant. Now, if you own an office building, that's not a good way to do business. You can't have half of your space unleased and just sitting there taking up space. How are you supposed to make your payments? And yet that is what's leading to a spike in delinquencies from office building owners. Oftentimes they're not the company themselves. The company says, we're done with our lease, we're done, we're leaving, have fun, go lease this to somebody else. And the office building owner has to find someone else to use that space, and they can't find anyone. Nobody wants the office space now, and that office building owner, they can't sell the office building because nobody wants to buy an office building. Everyone's there like, that's just a terrible investment right now. So they either need to sell the building for a tremendous loss, or they need to find another way of, they either need to slash rates and be extremely competitive, but that means that they get really far behind on their payments because they're making a lot less money. In the next 18 months, $1.5 trillion in payments comes due. $1.5 trillion. And this is getting worse by the hour and worse by the day, because what's happening is a lot of these contracts are coming up. Now, unlike when you get a house, mortgage rates, you're always going to have to pay not only the interest, but you also have to pay the principal, right? But over the past number of years, that has not been the case. People who buy office buildings have been paying interest-free loans. 88% of loans to people having commercial real estate, 88% of them were interest only. This is in 2021, which means if they just kept making their payments, they would never actually own the office building. They just continue to get the opportunity to occupy the office building. But see, banks are done with that. They're not giving out interest-only loans anymore. So if you have an interest-only loan and it comes up for renewal, guess what? They're going to say you either need to pay the principal and the interest now, or you need to go find another bank to mortgage you, because we're not going to do it. So this is a situation where the banks are dramatically increasing the payments that are due from office building owners, and office building owners are already in a bind as it is. And so this is not going well. We're seeing an implosion here. Now, on the good side, it does mean that the office owners are going to be on the hook as opposed to the banks, because the banks are going to get out of the loan, and they're terrible loans. But when they come to remortgage, they're looking at 5.5 to 7.5% interest rates, which is massively larger than what they were looking at before. And then they also have to pay principal on top of that. So we're seeing a lot of business office building owners who are going to be forced to sell. And when they're forced to sell, that's going to drop the value of office buildings in general across the board. It's a major deflationary. We talk a lot about inflation of things like food and prices for things, but we're seeing the price of cars, used cars, come crashing down. We're seeing the price of office buildings is really starting to crash down. And when it crashes, it's going to take out a lot. And you don't underestimate how much banks have on their balance sheets right now that are priced in office buildings. $450 billion of payments need to be made this year just to keep the office buildings current. Like I said, 4% of loans, commercial real estate loans, are now delinquent. They haven't made their payment for May. Those who haven't made their payment for May, 4% of all office buildings and commercial real estate around the United States. And it's going vertical right now. It's about to spike. It's going to go past 5%, 6%. It's like the mortgage crisis of 2008 all over again. And a lot of these loans are bundled into securities. Yup, that thing again. They're bundled into securities that are considered to be extremely investor friendly, because there's so many loans in this thing. But when you see the percentage of these loans going into delinquency, it makes those extremely not productive anymore. In New York City, before the cough crisis came, 90% occupied for office buildings in New York City. Now it's at 48%. That is kind of where we are. And there's other headwinds that are coming our way too. Student loans are about to start being repaid. If you haven't noticed that, because you don't have any student loans, I don't have any, but the thing is, student loans haven't been paid since the cough started. We have not seen all these people that are out there living the dream. It's because they haven't been paying their student loans. August 29th, that restarts. People are going to have to start making their payments again. And Biden is banned by law from extending that any further. He's kicked the can down the road a number of times. Trump's kicked the can down the road. And people just haven't been paying interest, and they haven't been paying principal on their student loans. That's going to mean $15.8 billion of wages is going to disappear. People are going to stop spending that at the Walmart. They're going to stop spending that on their food. They're going to stop spending that on all sorts of discretionary spending, and they're going to have to pay it to the U.S. government to pay for their student loans. That's going to deal a big blow to retail. That's going to they're going to get behind on other payments. If they have to choose between their credit card payments that are unsecured or their student loans, which are required by law for them to pay, which one are they going to get behind on? That's something that we're really seeing out there. They cannot default on their student loans. That's going to be essentially an 8% cut to real wages across the United States. 8%. Imagine 8% cut to everybody's wages overall. Now, not yours if you don't have a student loan. If you do have a student loan, it's going to be more than 8%. But the fact is that there's going to be 8% less money that people are going to be spending at businesses, restaurants, everywhere, starting in September. Is that going to be a headwind? Yeah, that's gonna put a lot of businesses in a real bind, and that's going to go month to month to month to month to month. We've been having essentially a $15 billion stimulus payment going into the market for the past several years. And when that's withdrawn, we're going to feel the pain out there. All right, folks, there's a lot changing out there. You need to keep your eyes because the banks are going to start imploding in the next couple of months here. We are seeing those, when those 2008 all over again. When we see those commercial real estate loans start imploding, it's going to be fireworks, folks. It is not quite as big as the mortgage-based securities, but the commercial-based securities, commercial real estate securities are smaller. But we also have the auto loans out there, and when you combine the office loans as well as the auto loans, used auto loans together, you're looking at a comparable bubble. And then there's a lot of other things happening in our society as well that are causing big problems too. So expect when that blows up, there will be a market crash, and it's going to get ugly, folks. All right, folks, thanks so much for watching. If you want to check out another video from this channel, you can check out right up here. If you want to check out Genesis Gold Group, ask them some questions or get some more information from them about retirement funds, you can click on that link right there, and I'll take you right to them. Thanks so much for watching. Steve Poplar of the Poplar Report, out.